Hey, quick preface, in this video, we're going to talk about the potential for a Robinhood short squeeze, the momentum that's happening, payment for order flow, and then we're going to talk about a Robinhood fundamental analysis. So we've got a lot to talk about in this video. I just wanted to give you a quick outline. Let's talk about Robinhood. All right, so obviously Robinhood has gone parabolic, and it begs the question that is Robinhood just running on some crazy momentum? Is it getting short squeezed? What's happening? And if it's running on crazy momentum or it's getting short squeezed, are we fundamentally overvalued at this point? Is it going to keep running or is it going to fall? When we look at other momentum-based stocks, we see the same patterns. Rapid up, rapid descent. Look at CCIV, Meta Materials, you name it, AMC, GME. We've all seen the parabolic run and then settle at some kind of lower level, although usually that level can be higher than where the stock was before. So are we going to return to $34 anytime soon? Probably not. I think the initial open of Robinhood falling 10% was likely due to insiders dumping shares to finally realize some of that capital they've been holding on to for a very long time inside the company. So I'm not sure we're going to fall back to those kinds of levels. But should we be sitting around $68 to $70? I don't know. Let's talk about this a little bit. First, it's worth noting that the odds are that right now Robinhood is not suffering a short squeeze. That's because, according to S3 Partners, we've got about 200 million shares trading. Of those, about 10 million shares are short. Now, I know it's hard for us to get our hands on short shares, but institutional traders have their ways. Anyway, that only works out to about 5% of the float. So even if that 5% is fully short, that is only 5% short. It's probably not enough to actually have a substantial short squeeze impact on Robinhood stock. So I don't think we've got ourselves a short squeeze. What I think instead we have is a stock that was substantially oversold when it initially IPO'd. And it wasn't oversold by retail, it was underbought by retail. So it was oversold by insiders, leading the price to fall. Retail didn't want to buy the dip because most people said, screw Robinhood. They were bad to us on GME. That's obviously the commonplace impression. And therefore, we're not buying their stock. Forget them, let them go to $2 or whatever. That was a pretty common retail impression. Now, it wasn't until whether institutional buyers or other retail started actually buying the dip that for a few days we had Robinhood start trending up. And when we started noticing that Robinhood was trending up, all of a sudden, Robinhood got the attention of Wall Street Bets. And all of a sudden, when Robinhood got the attention of Wall Street Bets, well, you guessed it, we got a parabolic increase in the price of Robinhood. In fact, if we take a look at the day chart right here, we'll be able to see exactly and corroborate exactly what I'm talking about. This actually, in fact, it's IPO'd so recently, we're better off going to the hour chart. So if we go to the hour chart, and we zoom in here, we can see IPO, plummet on IPO. People buy the dip on IPO day. We get some gains, a little volatility. We get a second day here of gains. We get 2 days of gains in a row. That was enough to get the attention of Wall Street Bets. And boom, all of a sudden we get this massive, massive explosion in price. Not only yesterday, that's Tuesday, where we opened up somewhere around $40. Actually, the open was $37.90. We closed right around $47.89. But then we get really the retail momentum pick this stock up. And all of a sudden, we open at $54.45 and end up closing at $66.77. Actually, I'm sorry, we closed at $70.39. Now, right now, the stock is down about 4.38% in after hours. Not a surprise for a day in which that it's up like 40 or 50%. Probably closer to 40%, which is pretty incredible. Any stock going up 40% to give back 4% in after hours, big deal. Now, a big tell is going to be what happens tomorrow. Are we going to get volume coming back to the stock or not? Now, we're going to talk about fundamentals in a moment, but just take a look at the volume here for a moment. IPO day, which usually has insane volume, 102 million shares. Next day, which ended up green, 40 million shares. Next day, which also was green, 19 million shares. Then enter volume, and it's buying volume. 89 million shares, 172 million shares. It's nuts. These are massive volume bars. Unfortunately, much to the success of Robinhood today, it looks like a lot of potential momentum-based traders have taken their money out of stocks like AMC to potentially fund their purchases in Robinhood over the last few days. Now, no guarantees of this, and I'm not advocating this at all. I love AMC. I'm still holding my AMC because I promised I would. But ultimately, Robinhood is a very interesting one, and I think right now we ought to talk a little bit about fundamentals, where Robinhood makes their money, and payment for order flow. So first, I want to disclose that Robinhood is a really big position of mine. It's probably one of my biggest positions, not just because the price has gone up, but it's a big position of mine. I also sent an alert. That's just one of my alerts that I sent. But I did send an alert when it was at 34.21, buying the dip on IPO day, adding to my existing position. Now, Robinhood, fundamentally, at this price, we got some talking to do about this. Before we talk fundamentally, though, let's hit payment for order flow. All right. Now, before I explain what the heck this Bloomberg terminal chart is here, I want to encourage you to check out the amazing links down below where you can join my programs on building your wealth in real estate, making YouTube videos, being a real estate agent, do-it-yourself property management, stocks and psychology of money, where we talk options, TA, fundamental analysis, you name it. So if you like the way I explain things, check out that 40% off coupon code. Stop the bullshit. The P, link down below. And folks, let's get into this right here. So this right here shows us that Robinhood makes a lot of money from payment for order flow. We already knew this. In fact, if we go to page 34 of the Robinhood S1, we'll see for the year ended December 31st, 2020, payment for order flow revenue was 75%. And for the 3 months ended the first quarter of this year, payment for order flow represented 81% of their revenues. So obviously, payment for order flow is a massive part of the money this company makes, which, if we look at the Bloomberg terminal, we can see exactly where this payment for order flow is coming from. All right, so to understand this, what you're gonna see here on the left side are different companies, and then on the right side, you're going to see total payments these companies received for payment for order flow. And you're going to see here that TD Clearing takes the cake at receiving $31.2 million worth of payment for order flow in just June 2021. Now, what's really interesting is you have Robinhood at $21.8 million for just equities in just June. Now, what's also really crazy about that is look at this. This is the year to date. You've got January here, $47 million in stock payment for order flow to Robinhood. Goes up in February to 51, goes to 34 in March, 16 and 13 in April and May, and pops off again in June. This is really interesting because you have, when you add up over here, 47 plus a 51, that'll bring you to around 98, plus a 34, that'll bring you to about 132 right here in payment for order flow on equities. Just super quick, dirty kind of math here. And then you'll see the payment for order flow over here. Robinhood only brought in about $51 million in payment for order flow, so a fraction of what we've had previously. In fact, if we divide 51 by 132, that gives us 38%. That's only 38% of the revenue they previously had from payment for order flow. And remember, folks, payment for order flow makes up 81% of the payments that Robinhood gets. That's intense. This is something to keep an eye on. Okay, then take a look at options, though, because we also get the amount of money that Robinhood makes from options. Now, you can see when it comes to payment for order flow for options, that options payment for order flow has declined about 8% at Robinhood in this last quarter here with options. You can see, though, that Robinhood is a powerhouse. Look at this, 71 million in options payment for order flow in June. That's a massive increase, and it's the largest payment for order flow they have had in the last 7 months. Folks, forget about the past. Look at the trajectory that Robinhood still has the power of commanding. Almost twice TD Ameritrade's payment for order flow revenue. Twice TD Clearing revenue. Almost three times E-Trade's options clearing. Multiple times. I mean, how many times is this? This is almost five times the clearing, or more than 5 times the clearing of payment for order flow payments that Webull does with options. Robinhood is a payment for order flow powerhouse. Now, this does create some potential risks. I mean, what happens if Robinhood's equity payment for order flow goes away, or somebody else comes up and all of a sudden gets more payment for order flow? Now, what's also interesting though is noting how much of this payment for order flow revenue actually comes from Citadel. Take a look at this. You could see, this is percentage by the way, you could see that 31% of options order flow comes from Citadel. 29% comes from global execution brokers. And when it comes to trading stocks that are in the S&P 500, 35% comes from Citadel, 31% comes from Citadel for non-S&P 500 stocks. And then you get to some of these others like G1X Execution, Virtu Americas, and so on. So obviously, payment for order flow makes a lot of money for Robinhood. We also know that payment for order flow revenue is declining for Robinhood in this quarter, about 8% here and substantially more over here. I mean, going down from 132 million to 51 million clearly made IPOing now a very smart choice for Robinhood, because that is a decline of somewhere around 61%. That's a massive decline on payment for order flow revenue. So we're going to see some revenues come down at Robinhood. Now, who knows? Maybe they'll come back up, but we had a little bit of a quiet quarter here, and these are some important things to consider when we get into fundamentals. So here's the thing. First thing we want to look at is the valuation of some of these companies relative to their revenue in Q1. Not all of these have net earnings, so I'm going to go with revenue in Q1. And so right here I have valuation. Stripe valued at about $100 billion. You've got Square valued at around 120. You've got SoFi valued at around $13 billion. Robinhood here valued at about $58 billion. And then what I did is I just took their revenue of Q1 alone, and I calculated a ratio of Q1 revenue to their market cap. So this is only Q1 revenue. And you can see based on Q1 revenue, Robinhood actually has the highest valuation out of all of these at a price of somewhere around $65 to $70. It's pretty pricey. You are paying basically a premium for the biggest payment for order flow processor. Now, if payment for order flow risks come out from the SEC, then obviously Robinhood's going to have trouble. But if payment for order flow gets the green light from the SEC and says, you know what? This is a competitive industry. We see that only 31% is going to Citadel and 29% is going to the competitors or whatever. Seems like there's enough of a free market here, which we all know is kind of BS. But anyway, if that's the case and that's what the SEC rules, Robinhood's going to get the green light for having not only the simplest platform, but also a platform that has a ton of users who are making a ton of money for Robinhood, especially with options trading. And so that's why you're paying a higher price to sales ratio here than what you would otherwise at potentially some of these other companies. Now keep in mind, Robinhood also has some of the highest growth out of all of these companies. I would say a rival company to Robinhood in terms of growth would be either SoFi or potentially Stripe, which obviously Stripe isn't public. But Square, Affirm, Coinbase, Interactive Brokers, TD Schwab, these are all going to grow way slower than Robinhood. And SoFi and Affirm, while they might be great, they also have negative Q1 operating profit, whereas Robinhood has an 11.3% operating profit margin. And this is actually where Coinbase shines. Coinbase brings a lot of money to the bottom line. Now we expect some of their revenues to decline as well as crypto volatility goes down, but boy, oh boy, they chose an excellent quarter to go profitable, or to IPO in, because they make lots of money. So don't get me wrong, you're paying premiums for companies like Coinbase and Robinhood, but these have situated themselves as basically being these powerhouses of consolidating users and then figuring out how to best monetize them. Take a look at this, folks. Robinhood has about 17.7 million monthly active users. That means right now you're paying about $3,276 per user at today's valuation for Robinhood. Given that each user makes Robinhood about $137 per quarter, at least using Q1 numbers, which means it could actually be less, it would take you about 6 years to break even on what you're paying at this valuation per user. It's on the rich side. And what we really need is a lot of growth to come to Robinhood and growth not to slow down. Unfortunately, when we look at website traffic data for Robinhood, we're starting to see a slowdown in website traffic already for a Q2. Now, it makes sense because that's similar to what we're seeing in payment for order flow. I understand a lot of people use the app, but these are some important things to consider. So if you're in Robinhood, you got to ask yourself, Is this a long hodl for you? If it's a long hodl for you, I'm all for it. Is this a short squeeze? No. Is this something where you want to make a quick buck and get out? Hey, well, take advantage of the fact that you've got a lot of volatility all of a sudden. You've got a movement all of a sudden supporting Robinhood. It'll either go up tomorrow or it'll go down tomorrow. Quite frankly, you might consider looking into taking advantage of some options to make sure you can hedge your strategy and ownership of these shares. And if you're not familiar with taking advantage of some of these strategies, check out the programs linked down below, like my Stocks and Psychology of Money course, where we talk about some of these strategies regularly, and you get to see what kind of trades I'm making. So folks, thank you very much for watching this video. If you found this video helpful, please consider sharing it. And folks, we'll see you in the next one. Thanks. Bye.